Hello Wolfpack, very excited for today's video. We've got a video collaboration with MegaWhale Crypto. I've worked with him for a long time and I know him in my personal life as well, and he's a very good analyst in the cryptocurrency market, and we're going to be talking about Bitcoin, we're going to be talking about altcoins, and we're going to be talking about a dead cat bounce, we're going to be talking about a full bull market recovery, whatever you can think of, traditional markets, interest rates. We're talking about it all today in this video, and it's going to be a very informative video. You're not going to want to miss this one. This is going to cover basically all of our opinions, and we're going to be questioning each other, interrogating each other to a certain extent on what we agree on, what we disagree on, in relation to the market, where the market is going, and we do both agree on the general trend of Bitcoin and where it will end up in the next year. So stay tuned to find out where we think Bitcoin is going to go in the next year as well. I hope you guys enjoy the video. I put a lot of effort into this one, and I think it's going to turn out pretty well. So hope you enjoy. Thanks for watching.
Okay, so what we have here on the Bitcoin index, which is a long-term history of Bitcoin, which essentially measures the price action since basically the earliest charted price action we have in Bitcoin, is the 50-week SMA, the 200-week SMA, and also the bull market support band, which, as you would know, is the 20-week SMA and the 21-week EMA. Essentially, the correlation between all of these critical dynamic support and resistance zones is that previously, what we've seen in the past in 2013 and 2017 is typically a bull market top, as you can see here. We drop below the bull market support band. We typically bounce off the 50-week, but it doesn't need to happen. And then we end up dropping below everything once we close the 50-week and end up bottoming out about a year later on the 200-week SMA. Now, the same thing happened in 2017, as you can see over here. We topped out, we dropped below the bull market support band. We bottomed out in the 50-week briefly. We had a little bounce. It's not really compulsory, but we did do that. And then we ended up about a year later on the 200-week SMA. The reason why me and MegaWhale are so concerned about the current price action of Bitcoin is because we've just had, literally about 10 minutes ago, time for recording this video, by the time it comes out maybe a few hours ago, a drop below the 50-week SMA quite convincingly. I think it was about 1,000 USD. Is that right, MegaWhale? I think about a 1,000 USD drop below.
Yeah, well, I think the 50 SMA was what, 47,700. So we're just over $1,000 US dollars below that point at the moment. So it's not looking too great.
And that's over a 1% drop. So usually what analysts will do is they'll say that something is not convincingly lost if it is dropped below or risen above by less than 1%, because it's a bit too close to tell. But this was pretty convincing. As you can see, we had a small little diversion below it here in July, but it wasn't really convincing enough. We ended up bouncing off it. But this drop was pretty convincing. And so the next logical step, according to what I've just explained to you all, is actually in about a year's time, maybe a bit less. And obviously this depends on market conditions. But the next logical step is coming down and actually bottoming out on the 200-day SMA, 200-week SMA, which me and MegaWhale both agree would be by the time we test it, probably around the 25K, maybe 35K region, maybe 25K to 30K region. And that's why we're so concerned about the market. That's why we're kind of advocating that, not only should you have taken some profits already, but if you haven't, seriously consider that. Obviously, it depends on personal holdings and personal situations as well, but it is a very risky market to just act like everything's okay in.
100%. I'd like to elaborate on that a little bit. I'm going to put up a chart that I've actually shown on my YouTube channel already. This is going to be a weekly chart, but it's more or less talking about, we actually talked about this one a few days ago, the implications of what we're actually seeing right now on the chart, and more or less reinforcing what Wolves of Crypto just talked about, which is a drop down to the possible 200 moving average on that weekly chart as a potential bottom if we do enter a bear market here, which seems likely considering we have dropped into the Gaussian channel. So what we're looking at here is we're basically looking at two things. We're keeping an eye on that the Gaussian channel, and we're looking at the 44 on the RSI. These are our two critical indicators on this chart that are basically going to tell us whether or not we're going to continue downwards or we're going to bounce and push up. So we'll dive right into it. So essentially we've got this 44 RSI here, and every single time we've actually dropped below it historically on Bitcoin, we'll zoom out a little bit so you can see, we've had a significant drop. Now this isn't just like a one-off thing, this is every single time we've dropped below this line, we've had a significant drop. So counting it up, that's about 8-9 times now, which is very convincing and indicating that if we do drop below that line, we will see a pretty significant drop again. And we do believe, myself and Wolves of Crypto, that we will come down to that 200 moving average. Now, obviously, it's not going to happen overnight. It will take time. So that moving average will trend upwards as that happens, and the price will kind of meet it down. We do predict, I think it was the crypto 25 to 30,000 range?
25 to 30,000, I think, if we were to bottom out in about a year's time, which is what the trend would recommend, or suggest, sorry.
100%.
So yeah, 25,000.
Yeah, and another thing that kind of backs that up is we got that Gaussian channel trending just above. Now, we did see a slight dip in, but we did close above it on the 12th of July, and we had that green candle, that bullish engulfing candle, kind of kickstarting the next leg of that the bull phase. Again, acting as support here on the 27th of September, and now more recently we've just recently closed in that Gaussian channel and now opened a candle in it. So if we look historically at the Gaussian channel, we've noticed every time we actually enter the Gaussian channel from the top side, we end up making our way below it. So we can see here, similar over here, we closed in, we ended up making our way down below onto that 200 moving average. Same thing here, we closed in, we ended up eventually making our way below. And if we look back to our first bull run in 2014, same thing. Closed in, we ended up making our way below.
Yep.
So not a lot of data there, guys, like only 3 separate occasions, but it's still a consistent pattern. And it does hold true on the smaller time frames. The Gaussian channel is a great indicator to predict price direction, especially on the larger time frames, guys. Anything you wanted to add there, Wolves?
Yeah, I would like to say something. I'll just share my screen quickly. About another thing about the 200-week SMA, because a lot of people generally ask me, and I know you probably have the same question throughout your community, is where is the best time or the best place to accumulate Bitcoin? And seeing as we've just lost the 50-week, I think it's very topical to kind of talk about this. And it's quite obviously, in my personal opinion, on the 200-week SMA, as you can see, and what I've talked about on my channel quite a bit, and what you no doubt would have talked about as well, is that every time we actually hold the 200-week for support, which is every time, right? Because we haven't lost it before, we never actually go below, obviously, that region again. And so the best time for a long-term buy of Bitcoin, I'll just circle some points here, is the 200-week SMA. If you're adding to a long-term bag, if you genuinely believe in cryptocurrency, I know there are some people, for example, who would believe that Ethereum's going to flip Bitcoin, etc., and Bitcoin's losing dominance in the market. I would disagree with that. I don't know what your opinion about that is, but personally, I would disagree.
No, well, I'm pretty much along the same wavelength of you on that one. I believe Bitcoin is the market leader, and
yep.
I don't think Ethereum will flip it. I do definitely believe Ethereum will increase in value over time, and I think that will be exponential, but I don't think it will flip Bitcoin.
And if it does too, I had this argument a few weeks ago on my YouTube channel. Like, if it does flip Bitcoin, I don't think it will be a long-term flip. I think in the best case scenario for Ethereum, potentially, if, say, for example, we saw an altcoin season here, which actually is a big if, right? It's not guaranteed at all, but it could certainly happen. Ethereum is only, off the top of my head, I think it's only a 2x or something away from flipping Bitcoin or something like that. And so, briefly it could certainly happen. But when that bear market comes, we all know what the institutions, we all know what retail sees has the actual true value. And that's not to say Ethereum doesn't have value, but Bitcoin is definitely still the safe haven. Ethereum's not out here controlling the market. That's Bitcoin that's doing that. If Bitcoin drops 10%, everything drops 15, 20%. That's not Ethereum that's controlling the market yet. Might change in the future. My personal opinion, I don't think it is. Now, just one more thing I wanted to talk about on the weekly, and this is in reference to your chart, Well. We had the RSI that you were bringing up, and you were mentioning that 44 on the RSI was a critical level. Now, just speaking of the RSI, I completely agree with you on that, but just speaking of the RSI briefly, I would like to say as well that we do actually have some sort of uptrending level support here that I've just kind of spotted while you were talking on the weekly, something like that. And we are obviously coming down to test that, and that's been going since around the 18th of December 2018. So we're coming down to test that now. So there are certainly some bullish aspects to the charts. We're not saying at all that there are none. We're just saying that it would definitely pay to be quite cautious here, and that the bearish argument perhaps has some more sustenance. As for the bearish RSI divergence that you kind of mapped out, I think at one point, what the bulls would say to that is that obviously we have a hidden bullish divergence, right? And this is why I don't like the bullish argument right now, because you can see the size and the scale of this bearish divergence is much larger and much more prominent than the small hidden bullish divergence we've got here. 100%.
The concern I have more or less is we're trending downwards now, and we can see. I don't know if I'll bring up a chart maybe in a second. I don't know if you use the Ichimoku Cloud too much, but I'm a big fan of Ichimoku Cloud. Let me try bring it up on a new chart. And we can use the daily to kind of determine or indicate whether or not we're in a downtrend or uptrend. And a great way to do that is using the lagging span. Let me get rid of these indicators. The lagging span, which is a black line, and the price movement to basically confirm a trend. And generally what happens when the price is above the clouds and the black line, so the lagging span, is also above the clouds, it indicates we're a confirmation of a trend. All right, confirmation of an uptrend. So vice versa, if the lagging span is below the clouds as well as the price, it indicates a confirmation of a downtrend. We saw a very similar thing happen in this drop. The lagging span was below the clouds, the price was below the clouds. It indicated a downtrend. At that time, we also had a bullish divergence on the RSI. So I think these short-term divergences, although they can trick the novice investor into thinking we have a potential reversal, if you zoom out and look at the bigger picture, the overall trend will always kind of prevail, in my opinion, particularly in periods of like rapid downwards price action where we have these indicators usually lagging behind the current price. Now the lagging span is a momentum indicator, guys. So it's going to be 26 periods behind the current market closing price. So if we shift the current market closing price back 26 periods, that's kind of where we're at with the lagging span. So generally what we're waiting for, if we're going to be trading based off the lagging span and based off the Ichimoku Cloud and waiting for a trend reversal, and I would say this is a safe option because the Ichimoku Cloud has historically been really accurate in predicting overall market trends and structures when it comes to Bitcoin. I would be waiting for a similar thing like this over here. All right, more or less even down here. So we're waiting for two things. We're waiting for, number one, we're waiting for the blue line, so the conversion line, to break above the red line, which has got our baseline. This is going to indicate a potential price reversal and an entry point for a trade. And we're going to be waiting for confirmation of that reversal into a long-term trend with the price and the lagging span breaking above the clouds. If we have all of those three things, I'd be very confident that the price is reversed and we're potentially heading back up. Do you have anything to add on that one, Wolves?
For sure. Well, I think that, just keeping your chart up there, you've mentioned various dynamic resistance and support zones that would confirm a confirmation. And I would argue, and I think you'd also agree, that the uptrending level of support that we have from July through September, that we've recently dropped below, I think about a week ago, and it led to the massive drop. That would be another confirmation for me that the market may be becoming slightly safer again to enter, because it would confirm that we've retaken that support zone that was actually meant a lot. I think you'll remember that a lot of the bulls, including myself as well, that said, that has to hold in order to maintain a strong bull market. And instead of actually just dropping below and now we're going to try get back above, what we've actually done is we've dropped below it and we've come back up, retested it, it's acted as resistance, and we've further dropped below, which is even more bearish from my perspective. 100%.
And we've been saying, I think I'm not too sure if you've been saying, but I definitely been saying, I know you actually know, we've both been saying that ever since we dropped this line here, ever since 53,000 broke, I wouldn't say necessarily bearish, but I definitely have pulled back on being bullish. I'm definitely not bullish anymore. I was more or less in a territory of neutrality, kind of waiting, sitting on a fence, seeing what's going to happen. But now since we've lost that 50 SMA, I'm definitely leaned more to the bearish side. And I do believe that I'm holding $43,000 as that initial price target. And as a possible bounce zone, we do have 43,000 to 40,000 as a nice strong support zone. If we can see, I'll draw it in on the chart over here. This is a pretty strong support zone, and I would honestly say this is our last line of solid support before we see a crash down into a 30,000 range.
Yeah.
And I would also say this is a great opportunity to take some risk and maybe to load up a little bit on altcoins of very tight stop losses, just in case we do get a reversal. But again, this is future talk. We'll talk about it when we come closer to the date. For now, the key concepts are, with below this trend line, the overall market trend is now downward. We have confirmation of a downward trend based on our momentum indicators. There are short-term signs of reversals, but our short-term signs of reversals are outweighed by our long-term trends and our daily and weekly charts indicating we have a bear market coming. So right now, the only viable option is to be cautious and to be patient. You know, trading against a trend never ends well for anyone, unless you're lucky or you're very experienced. Generally, trading against a trend will just get you get your bags underwater and you'll be down pretty bad by the time the actual good buying opportunity comes around.
Yep, for sure. I'll add something. I'll share my screen here on the daily chart, and we can talk about that potential bottom for a little bit, and also why it's not a smart idea, just further expanding on that, it's not a smart idea to kind of trade in a chop zone, because the reality is, as you would have seen all over Twitter, if you trade in a chop zone, the likelihood is you're going to get chopped up, right? So what we're going to be seeing here, and I've got a few trend lines here that I'll just delete for a second so we can just ignore that. The reason why I think that the bottom here at 40K to 43K, yeah, it's definitely going to happen, right? I personally strongly believe that we will see some sort of bottoming out here in this region, right? That's definitely the next major zone of support on Bitcoin. But my worry with that, my concern with that is if we come down and we bottom here, the next logical step is a bounce, of course, but it seems like we would be seeing a larger head and shoulders pattern, right? We would have perfectly bottomed out on that neckline, and hence we could see a little relief rally or dead cat bounce. That could be the period in which we see some sort of altcoin season. It really depends. It's way too early to say, but it really depends. But ultimately, that does not look bullish to me, right? We can't just come down. It's not like a longer term double bottom, in my opinion. That's definitely going to be a head and shoulder, especially considering we've lost the 50 week. Now, here's the thing on the daily chart that I want to talk about, and it's in relation to people trying to catch the bottom. There are multiple indicators that would suggest we're kind of looking a bit bullish, right? And that would be, for one, the RSI. Okay, it's pretty clear RSI divergence. We've had that in the past. The problem with the RSI and the problem with the MACD and the problem with the fear greed index is none of them suggest a immediate bottom. They all suggest that the bottom is coming, but we're not really going to be sure where it is, right? It's kind of, they're all oscillators to a certain extent. Yeah. And so relying on something like that, you know, the bottom could be coming, but you know, it could be coming at 43K. It doesn't have to come right here. And by the time we get to 43K,
that's 100% correct.
Drop. Yeah, exactly.
And that's why we use those larger time frames to basically kind of like weed out these discrepancies and these, I would say, false indicators on the shorter time frames. You know, like we spoke about a few minutes ago about potential bottom showing on the short time frames, and then how if we zoom out, it becomes apparent that we're very much still in a downtrend. And you're right. Will we see a dead cat bounce? Probably. It does look like the market's rearing after a dead cat bounce. But I'd like to ask you a question, which is, what level do you think we would need to get back above? I know I've got my answer for it, but I'd like to understand your point of view before we become bullish again. I know I said to my channel 53,000, but let's see what you think.
I'll bring up a couple of indicators to help answer this question, because I have talked about this on the channel quite a fair bit. And for me personally, the bull market support band is a big part of whether well, obviously according to the name, whether Bitcoin is in a bull market or not. And what we can see here is, in order to get above the bull market support band, we need to get above 52.8K currently. But I would argue that we need to actually close above, as I said before, this uptrending level of support that I've got in yellow here in order to look even slightly bullish again. Before that point, it's not even worth considering, in my opinion. I think we just need to be on the sidelines or just waiting for some sort of better entry, because right now it's just abysmal, right? So getting above this uptrending level of support, it's not going to look like that. Obviously, I'm just drawing something to kind of paint the picture. Getting above that line of support will not only flip the bull market support band, not only flip 53K, which would put us back in a major zone of support, and not only flip this uptrending level of support, but it would put us in position, depending on the structure, to make some sort of, right, if we bottom out on this trend line, for example, to make some sort of inverse head and shoulders pattern potentially and see a full recovery. That's kind of the best case scenario that I'm seeing here. That's kind of the most bullish scenario, right? I think that if we see this long drawn out kind of, I think it's just going to end up in downside. I think the best case scenario we'll see in that situation is a dead cat bounce. But you know, in order for a full bull case to continue, I think we need to see some sharp upwards action, because we're running out of time here. This compression, you know, it's getting quite serious. As you can see, we have a couple trend lines kind of painting the picture of some sort of descending wedge, but not particularly that clearly. But we are compressing, and we're running out of time to make a move here. The longer we wait, the more people are just going to become disinterested in crypto, like we saw here in May to July. It took so long to see a recovery. And back to the RSI and stuff. Let's just bring the RSI up one more time. Just as a bit of an example, the reason why the RSI isn't a big deal in my opinion, and I've said it before, it's an oscillator, it doesn't recommend it or suggest an immediate bottom, but you can see that during this drop here in May, we had an RSI divergence, bullish RSI divergence for literally like a month and a half, well, more than that actually, almost 2 months, and we were heading downwards, RSI was heading up, and nothing happened, right? We just continued dropping. Finally, we saw a reversal. But the point is, it can go on for an extended period of time without any reversal, and during that time, your alts were down 80% easily. So
100%, and that's the thing. Now go to a 3-day chart for a second. Now let's go back to that exact point. Let's take a look at that RSI divergence again on a 3-day chart. Is there a difference? Can we zoom in?
Yeah, for sure. Well, it's just a bullish RSI divergence, and the price just kept heading downwards for quite a long period of time. I mean, it's a bit more scattered than the daily chart, but it is certainly there.
Yeah.
Another thing about the 3-day chart as well, but I already had up before we just deleted that line here, is a longer term, I wouldn't necessarily call it a bullish divergence, but a longer term support line or support trend line on the RSI that we are currently testing right now. Now, along with the weekly chart that I brought up before, where we had that long-term support line, the RSI, this is a potential bottom zone, right? But I don't think it means the bottom is in right now. Look, this could go down to 43K, which could still be on this trend line, and we could see that dead cat bounce before a drop below, right? It doesn't mean it has to hold here. We have to go to new all-time highs, but it is worth considering, worth noting that we do have support currently.
100%, I agree. Can I bring up a chart real quick? I wouldn't mind talking about, before we get into, I guess we've talked a lot about the bearish case scenario and what we think is going to happen on the downside. I wouldn't mind bringing up this chart before we go ahead and talk about, potential reversals and maybe even what is the possibility of a bull market. But I just want to bring this chart up real quickly. Now, I know a lot of people have seen this chart, but I'm just going to annotate a few things. So we have that period over in our, let's delete that. Basically, this is our 2013 through 2014 bull market here. We have our 2018, 2017 bull market here. And the big question is, for a lot of people right now is, was this right here our bull market? That's the question a lot of people are trying to answer. And I guess that's where a lot of the speculation lies right now is, have we actually already seen the top? And was this the bull market? Historically, every time we break above this trend line, this resistance line, we enter a period of basically parabolic price action. And we did see it, 2013, we saw it 2017, and we did see it Q1 2021. We did recently push back upwards, but we did get rejected on this trend line. We did double top and get 2 candles rejected, and since then we've head back down. So the big question is, will we reverse strong enough to get back over this line? Because for us to go into a parabolic bull run, we do need to clear this line pretty rapidly, I would say. Let's bring up our 200 moving average. So coming back to what we were speaking about before with the 200 moving average, we can see Wolves of Crypto talked about it earlier with the bottoms on the 200 moving average here. According to this chart, the same thing's being shown. We brought that 50 SMA broke down, continuing downtrend, rejection on that long-term trend line after an initial breakout. It does look like we're trending down, but I would like to add one more thing before we head into our bull case scenarios, which is, for us to basically go parabolic again, I would actually like to see a break of this trend. And I've been saying 74,000 is that breaking point. If we do break above 74,000, we will most likely head upwards into a parabolic bull run. Otherwise, we're going to slowly diminish back down to that 200 SMA. Do you have anything to add there, Wolves?
No, I think that's perfect. That's definitely correct. That trend line is definitely something to look at in a longer term time frame. And what it does suggest, is that this bull market has been quite pathetic in comparison to other bull markets, and well, that's assuming it's over, which personally, I would lean towards it being over at the moment, unless we see that jump above the trend line that I kind of pointed out before. But and I think one of the reasons for that, we can talk about this briefly, is the shift in control in the market from the retail to the institutions. And you talk about this quite a bit, so I'd assume you know a bit more than me about it. But do you think that institutions now have a firm grip on the market in comparison to previous cycles where we just went straight up because people just FOMO'd in, there was no kind of manipulation to bring us back to the downside?
Yeah, so that's a good question, Wolves. I would definitely say that's correct. Now, if we look at the Feds and the Federal Reserve and what they're doing with the interest rates, basically we all know they've been pumping money into the traditional markets. All asset classes, and particularly risk assets, have been basically increasing pretty rapidly, guys. We've seen a huge explosion in the SPS 500, the Nasdaq, and even Bitcoin. Bitcoin is a risk-on asset, so it's been increasing with that. Now, the Fed they've been keeping interest rates quite low, and what that means is low interest rates equal, it creates a credit market. That money finds its way through institutions into the crypto market. So you find these institutions are now investing a lot of low interest money and low credit money into crypto, and we've seen that in that recent drop. We would have seen a huge shift from the retail basically into the hands of the institutions. And we can see, even if we look back on, I would say, even if you look on Twitter, I know I hate saying this, but Twitter's not a reliable source of information, but even if you look on the general sentiment of the retail investors, you can definitely tell in the last few months, there's been a lot more speculation, a lot more panic, and a lot more unease. And even with these large liquidations of billions and billions of dollars of retail money getting liquidated overnight in these recent crashes, that's a very clear sign that the retail is no longer in control. If the retail is in control, we would continue to be going up.
For sure.
The retail doesn't want the price to be going down, we'd be continuing up. So there's definitely, I don't know if it's institutions controlling the market, but there's something going on behind the scenes that's driving the price action, more than just speculation and adoption.
100%. And I think that because of the lack of quote unquote only up that we've been seeing this year, the market has been quote unquote more harder than previous cycles to make money, which it has, right? It's been a lot more choppy. If you look at 2021, the whole of 2021 is just sideways chop. And like I said before, if you're going to trade chop, you're going to get chopped up. That's what most people are getting right now. They're getting chopped up, right? A lot of people would have lost a lot of money in 2021, even though the trend has been slightly upwards. Okay, the reason why I think that this market has been harder, not only because institutions have had control, they've had the ability to flush people out on a larger basis than they did in previous cycles, but because of the lack of upwards price action, we haven't really had much. There's been a lack of FOMO, and because of the lack of FOMO, there's been a lack of new people coming into market. If you look at Google Trends, for example, in previous cycles, and it sounds a bit abstract to say something like that, but Google Trends is actually a really good indicator that I use regularly, right? Bitcoin has had very, very, very little interest, the word Bitcoin, in comparison to previous cycles. I mean, 2017, we even had more searches per day on the word Bitcoin, which is crazy, right? Because the price is so much higher now. And it just further emphasizes the point that the institutions are the ones controlling the price. They're the ones adding value to Bitcoin. They're the ones pushing it up, pushing it down, not retail, right? Retail 100%. Is actually less interested than 2017.
And just looking at this chart here, we can see, in comparison to 2013, 2017 bull market, it's been pretty, if this was in fact the bull market, it was a very underwhelming bull market. Now, we don't expect a 500% rise from that trend line break, because obviously we can't continue with that diminishing returns model. It's not realistic to expect a 500% rise up to $250,000, But
yep.
A 50%, just over 50% rise from that trend line break is definitely underwhelming and was not expected by a lot of people.
For sure. And I think that expectations are going to continue to be disappointed now that the institutions have control, because it's like a lot of people say, if too many people expect it, it's probably not going to happen. That didn't stand true in previous cycles, because there was no external force that was stopping things from happening that too many people expected. Now there is. Now there's that manipulation.
Well, that's
And
100%
so
correct.
this is going to act more, in my opinion, like a forex market rather than than what we know as a cryptocurrency market in the future. Now, I think the 4-year cycle, a lot of people don't really understand what it is at a fundamental level. They think 4-year cycle just means top out in December. Not particularly, right? 4-year cycle actually refers to the halving of Bitcoin. I think that will continue to take effect and will continue to trigger bull markets. But it does beg the question, if this is the end of the bull market, right? We haven't seen a typical end of the bull market. So will we see a typical bear market? That's kind of the question we're all trying to answer. And it's kind of hard to answer because we can't, you just can't, we don't have enough data for it. But I think we do have to rely on the technical analysis. And that does suggest that 200-week SMA is the next step.
Yeah, well, I'd have to almost challenge that statement and say, why haven't we seen a typical bull market? And can we say this rise above here wasn't typical of a bull market? I know we would definitely say it was a bit early. We can definitely all agree on that. But according to this chart here, a break above this trend line sends us into a bull market, and we did actually go into a bull market. So what would make, besides the lack of, I would say, price movement, nothing about this is not typical of a bull market. So
in relation to
the other bull markets, yeah, but like I would say it's all about perspective. And I think even right now, a lot of retail investors and novice traders are still expecting $100,000 Bitcoin and still overly bullish. And I remember in 2017, after that huge drop, 2018, people were in the same situation. You know, they were overly bullish on the way down, and they ended up holding their bags and selling at the bottom. And I think if we do go into another bear market, I think it's going to be a very bloody bear market. I think a lot of people are going to get, they're going to be down 80-90%.
For sure. I will say that there is the argument to be made that the cycle has in fact lengthened already. I mean, I did a video on my channel. I can't have the data up right now. I just simply don't have the charts up for it. It took a while to make, but we have actually lengthened from the halving and from the bottom. And so that's why I think that people are calling for lengthening cycles and calling for Bitcoin to go higher because of lengthening cycles is inherently a flawed argument, because it has already lengthened, right? The cycle has already lengthened, and it already did from November 18th, which I think was the top, something around there. And also, we have lengthened, and also you could argue from a traditional 4-year cycle argument that we actually topped out in mid-November. Now, in 2013, we topped out in late November, and in 2017, we topped out in mid-December. So we've topped out in the same region. So I think that all of the boxes have been ticked, and now it is time for some bearish price action, because we've seen a lengthening cycle and we've seen some sort of 4-year cycle. It just hasn't been as typical as we would have expected.
Just want to quickly show you this 4-hour chart here. Get your opinions on it. We do have this descending channel on that 4-hour, which, the descending channel is usually a bearish reversal pattern. We usually have a price inwards, bouncing, and then continuation upwards, with this being our entry and breakout point. Generally, we can do a measured move to determine how high we would actually come from this, and indicating here we would move up to about, I think it was about 52,000, 53,000. If I put it accurate, about 53,000, which brings it to that support. So this is another indication, guys, that we could in fact see a little bit of a bounce here before heading lower, which Wolves was talking about earlier. But again, keeping an eye on this descending trend line here from this channel, and I think if we do break above it, we could see a little rally from altcoins, or we could see a nice entry point. But I definitely don't think, or at least I wouldn't be bullish again until we break that 54,000, 53,000 range, maybe close a few candles above the 200 moving average and get above that trend line.
Sure, for sure. There's always an opportunity for a bounce. It just needs to do something, right? In my opinion, anything under 52,000 is just a blur to me, right? Anything between 43 and 52 doesn't mean anything to me at all. Besides the fact that we've lost the 50-week SMA. What I do want to talk about, what we want to kind of lead into a little bit, if you're ready to. Oh, Bitcoin dominance, you're bringing it up right now. Excellent. I was literally just about to talk to it.
Yeah, so real quick, Bitcoin dominance. Actually, I'll let you take this one.
For sure. I can just talk about it from your chart. Actually, no, I'll bring up my chart.
All right.
Just for a second, if you can just turn off the screen share. And this kind of leads into the whole altcoin season argument. When are we going to see an altcoin season, etc.? So this is Bitcoin dominance, the chart that MegaWhale just had up, and obviously Bitcoin dominance chart. I'll just explain it briefly. It's a chart that measures the percentage of wealth in the entire cryptocurrency market in Bitcoin in comparison to altcoins. So right now it's at 40%, which means 40% of the money in cryptocurrency is in Bitcoin. And that means obviously 60% is in other coins, altcoins. And right now, Bitcoin dominance kind of has a trend, whereas if we see a bear market or bearish phase in the market, people flock to Bitcoin, right? It heads up because people want the most secure asset or whatever, and they see altcoins dying everywhere. And when we see altcoins kind of have their strength is when Bitcoin dominance goes down. You can see in 2017 we had that famous altcoin season that everything went 10x, 20x in. Bitcoin dominance dropped down in about 4 weeks from 67% all the way down to 36%. In May this year, okay, we had a big drop as well when we saw altcoins go a little bit in rally mode. Okay, right now what we're seeing on Bitcoin dominance is a point of indecisiveness, kind of. We're seeing a triple bottom kind of thing, right? We saw two bottoms on 40%, and we're seeing a third test of 40% right now. Now there's two scenarios here, and it's way too early to tell which one's going to come out on top, but there are two scenarios. One of the scenarios is we dead cat bounce on Bitcoin. Bitcoin dominance drops as Ethereum gets stronger than Bitcoin and rallies. Altcoins go crazy, and this bottoms out in say 30%, 25%, and then we enter a bear market, and Bitcoin dominance trends upwards as Bitcoin trend downwards. Right. The other scenario is we've bottomed out 3 times. Right. It's a triple bottom, so we just head upwards, like as technical analysis would suggest. And that would suggest that Bitcoin's either going to have another rally to new all-time highs, or Bitcoin's entering a bear market where we just trend upwards slowly over time.
Yeah, I would have to agree with that. It is a little too soon to tell. I would like to see a drop below that green resistance line. You have green support line, or green support zone, better yet, that you have indicated on your chart there before we kind of have a bit of any conviction with the potential direction.
Yep.
But yeah, everything you said there is completely correct. Bitcoin will trend upwards if we're in a bear market, and we would like to see a nice strong drop down for a alt season rally. But even in, what was it, May this year, when altcoins shot off, we can see we had that huge drop down just there. Like that
Yep.
In that recent few months there, from February to May, even that huge drop. We saw altcoins rally pretty hard there. A lot of coins did 20x even, if I remember correctly.
Yeah, for sure. And what it's worth noting as well, if you brought up the Bitcoin chart right next to this chart, you would notice that when Bitcoin started chopping and doing so, it moved like this, and then it started going slightly upwards, but not really, right? That's when we saw a drop in Bitcoin dominance. It's because people got bored of Bitcoin, like quite literally got bored of it, and started shifting money into altcoins, and hence Bitcoin had less strength and altcoins started getting strength, and that just had a snowball effect, and we just head downwards massively in two lows at about 39%. Now, one more thing in relation to altcoin season, and then I'll let you take it away with whatever you're going to talk about. And this is the second most important chart, in my opinion, that we need to be looking at. Sorry, I just have a bunch of circles here. This is the Ethereum Bitcoin chart. As you would know, Bitcoin is the leader of the market. Ethereum could be seen as the leader of the altcoins, okay, or the queen of the market, whatever you want to say, right? Second in command. And essentially what we've seen on the Ethereum Bitcoin chart, and this is a chart that measures the strength of Ethereum in relation to Bitcoin, right? So when altcoins drop massively, like you would have seen here in April to May, right? Ethereum Bitcoin went up, which means Ethereum had more strength than Bitcoin. Bitcoin dominance drops when that happens, okay? So you can see the correlation there. Bitcoin dominance dropped, Ethereum Bitcoin went up. So when Ethereum Bitcoin breaks through resistance, that is a sign that altcoins are going to start rallying, all right? Because it means that Ethereum and altcoins are getting stronger than Bitcoin, and that's going to continue happening. Now we're at massive resistance, at a continuation resistance, I've got it marked here, which is at about 88,000 sats. Once we break 88,000 sats and close a weekly candle above it, that would be another indicator that we'll be entering an altcoin season and a short-term dead cat bounce. Now, it's worth remembering, and it's worth considering, that altcoin seasons typically mean the bull market is over, right? It's the last kind of firework of the bull market. After an altcoin season, we go into a bear market. That's what's happened historically, and we've got no reason to believe that won't continue happening. So, that's worth noting. If we do see a dead cat bounce and an altcoin season, that's a further confirmation that we're going to bottom out in the 200-week SMA in the future.
Yeah, I agree. And I don't want to get too much into altcoins today, but looking at a lot of altcoin charts, a lot of altcoins have already dropped. I don't know, some have even dropped 70%. You look at Osmio Go is down like 69% from that high in November, and a lot of them are testing their critical long-term support lines at the moment. So it wouldn't be bold to assume that we could see either a dead cat bounce or a strong rally on altcoins here, because if they did have to drop any lower, I would say they would crash and burn pretty hard. So
Sure.
yeah, I don't want to go too much into altcoins today, but it's worth noting that a lot of altcoins have dropped a lot, and a lot of them are looking pretty decent right now compared to Bitcoin.
Yeah, pretty decent. But in my opinion, decent isn't an excuse to buy. Obviously, if you're
100%.
short-term trading, that's a different story. We do need to be waiting for
Still
confirmation.
very high risk.
Yeah, for sure. All right, that's all I've got to talk about. If you've got anything else to add, let me
Yeah,
know.
I just wanted to ask you what you think, because a lot of my followers in my channel on my Telegram always talk about the traditional stock market, and I did briefly touch on about 10 minutes ago the relationship between the lowering or the dropping interest rates and the money pumping into traditional stocks, and how that affects the risk on asset class investments such as Bitcoin. But from recent news that we've kind of got from the Fed is that they're going to start increasing their interest rates pretty soon, because they can't continue to pump money into the markets forever. They can't continue to inflate the market. Eventually, they can continue for a little bit longer, but eventually they're going to have to start increasing those interest rates again. And I guess, do you think that could be a catalyst, or I guess part of a catalyst that could push Bitcoin lower?
I think it definitely could be. The correlation between stocks and Bitcoin, even though not conventional and even though not what we would expect, because obviously Bitcoin, and this is the whole argument people can get into, Bitcoin is meant to be kind of the alternative, but it does so clearly act in accordance to traditional markets and whatever the Fed is doing. And so whatever the Fed does could 100% affect whatever Bitcoin does. I think that, what is it now? I think it's like a 13-year bull market or something the SPX has been in. I'm not quite sure off the top of my head, but you can see
been
that,
about that.
Yeah, every single correction we have on the SPX directly affects cryptocurrency. And so, if the Fed does do something, if they do raise interest rates, if they do keep them low, it's going to have a direct effect on Bitcoin. And as MegaWhale explained, what that effect will be, it's going to play out. So it is something worth considering. If you're into crypto, you need to also be into the traditional markets to some extent, because at this point in time, hopefully in the future, we divert away from it. But at this point in time, there is a strong correlation.
Perfect. I think that wraps it up for today. I think we've gone basically over everything. Just to summarize, we broke down 50 SMA. We've got a confirmed downtrend at the moment. We've got a lot of resistance between where we are now to where we would need to be before entering back into a bull market. Overall, we are heading down to what we would assume to be the $25,000 to $30,000 region, unless proven otherwise by a convincing break above 53 to 54,000.
Yep.
I think that about summarizes. Anything else you want to add there?
That's it. Thanks for watching, guys. Hope you enjoyed.
Yep, and we'll probably be doing a lot more collaborations in the future, so stay tuned.
For sure.